Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look.
So, the US government shutdown is now a fact. However, the market, as we expected, did not panic or start selling America. So far, there's an appearance of risk appetite. Over the last 3 days, EURUSD candles have developed long upper shadows. Wicks, indicating sustained upside suppression. As noted in yesterday's outlook, conditions for sluggish euro growth remain in place, potentially extending toward the upper boundary of the price channel at around 1.1910. Whether this level will be reached depends largely on the effectiveness of political messaging and whether investors begin to rotate out of equities and into government debt. A confirmed drop below the MACD line and under the 1.1703 level would be the first signal of shifting sentiment. The Marlin oscillator remains neutral at that moment. The nearest bearish targets are 1.1605 and 1.1495. On the 4-hour chart, the Marlin oscillator moving sideways within a moderately wide consolidation zone above the zero line, a sign that risk interest is still present. This sentiment could persist if the price breaks above the MACD line. It's a blue line on the H4 chart, 1.1765. Conversely, a move below 1703 would amplify bearish pressure.
And now it's time for GBPUSD. Let's discuss it with Paulo Greco.
The average volatility of the GBPUSD pair of the last 5 trading days is 88 pips, considered as moderate for this currency pair. On Thursday, October 2, we expect price movement within the range of 1.3392 and 1.3568. The longer-term linear regression channel points upward, confirming the continuation of a bullish trend. The CCI technical indicator recently dipped into oversold territory, signaling a potential resumption of an uptrend. The GBPUSD pair is currently in a correction, but its long-term bullish outlook remains unchanged. Donald Trump's policies will continue to exert downward pressure on the dollar, so we don't expect any sustained recovery of the greenback. Long positions with targets at 1.3672, it's a blue thin line on the chart, and 1.3733 is a thin purple line on the chart, become especially relevant if the pair trades above the moving average line. It's a sign line on the graphic. If the price is below the moving average, short-term short positions may be considered with technical targets at 1.3367. It's a dark green line on the chart, and 3352. Occasionally, the dollar shows signs of a correction, as it does now. But for a true trend reversal, it needs real progress, such as the end of the trade war or other major positive developments.
That's all for today. See you online soon.